The question we're trying to answer is, do you have a business of any value? Because in this world, if the margins drop from 80 or 90% down to 20, 30 or 40%, we still can have a business. We just can't have a business of any value.
I also think that the more that we are using AI, chatbots, voice, whatever it may be, as soon as you could go back to those real life coffee chats, those meetings, the value of those connection, that physical connection of being in the same room was far superior to them what it used to be. And I think we're going to have the same thing with this AI.
And I think, Don, the nuance in what you said there could easily be lost, that the reason we focus on the humanistic capability is we don't know the freaking answers. But if we develop the competencies to be able to navigate change loops, to be able to navigate conflict, then we're better placed to be able to navigate that. And that's why we focus on those things and supporting founders with those toolkits.
I think the lesson for founders is just a constant reminder that it's never the best product that wins. It's never the best service that wins. It's the one that's the most simple to understand and that resonates with your story. People engage when they read or hear words that resonate with their story.
What's the ice skater, the Aussie ice skater that everyone fell over?
That's Stephen Bradbury.
Don is entering the era where he is just going to totally outperform everyone because everything he hates doing is going to get done for him, and Don's going straight through.
Good morning, team.
Morning.
Morning.
Morning, guys.
How are we all?
Awesome. I got in there this time. It's been a big week. Digesting still. There's so much stuff hanging over from the US trip. It just takes a while for our little brains to get on top of everything.
I feel the same. And then the number of conversations with people this week, and it's like, how do I impart everything in my head and download it for you? Because it's the disparity of understanding over here versus there is huge.
I reckon Elon's Neuralink. Let's just go
I think
do
it's
that.
the only way. Just connect brain to brain.
And you, Ash and Jack, you've had some time in the office together?
Yes, we have. We're alive. We're thriving. Yeah, and excited to have Aaron here tomorrow. Get a little visit in. It's going to be fun. And then Stone Hearts and Minds on Friday. So busy week. Exciting though.
I can't wait to see you both. I'm really looking forward to Adelaide.
Yeah, don't mind me. I'm fine.
Hey, it's not too late to book a ticket.
How many we got?
53 registered for tomorrow, and then we'll catch up with SA government. And then after that, we've put on some drinks for a little select audience of tribe followers and fanatics and friends. So it should be good.
The 4 Fs. Friends, fanatics,
Fools,
and fuckwits.
family.
Family, yeah. Interchangeable. What are you talking about? And what is it we're talking about?
The US mission. So we've got our delegates who attended from SA. We'll be sharing their insights. We'll talk about the lessons learnt, what founders and investors can be doing, and the knowledge they can take away to help them improve things back here as well.
And we're launching our next mission for March. So any listeners that want to come along and think they'd get value, both on the investor side and the founder side, we'd really love to take you, because it's just until you're there and you're sitting in front of founders who have done the US expansion and can explain what went well and what didn't, so you can learn from it, or sitting with other investors or sitting with AI experts in Silicon Valley, in Stanford. It's just, you just cannot learn from here. So we would love to host you if you're interested.
Yeah, and lots of founders have been to the US, but what I would say is it's one thing to go there. It's another thing to go into the heart of the tech ecosystem, but to sit in front of the best in breed at what they do, the biggest accelerator, one of the biggest venture capital firms, one of the top 50 AI experts in the world, like to get access to those, for me, that was the big game changer.
And the cohort.
Oh, absolutely.
Like, it's easy to forget sometimes the value of doing it with 15 other founders and investors.
Yeah, totally. Yeah. And I'm really looking forward to seeing everyone tomorrow to hear how they've gone post-mission and what their takeaways and reflections are as well.
Well, let's jump in. So there's a couple of items to recap. So our previous couple of episodes have obviously been reasonably AI focused. And I think the last one, the title I selected was worthless. You, your SaaS, and your data, which I had a few messages as to what's wrong with me, who hurt me, and why do I have to be so aggressive. But there was a post during the week that I think we can agree is directionally right. The post was from Greg Eisenberg. It said, I don't think we've fully priced in what it means that SaaS can be copied in 24 hours with AI, and what that's going to do to the $500 billion SaaS market. This is how he believes it's going to play out. New SaaS software pops up left, right, and to the center at lower prices that are creator-led. SMBs start to abandon their traditional SaaS providers, choosing between AI clones at 1/10 of the price or creator-led brands they trust. Why pay $100 a month when the copy just costs $10? Enterprise stays with its current vendors, but they're buying stability, not features, and they demand 50% discounts when 100 competitors exist. 10,000 new AI-first companies then split the $100 billion SMB revenue. Top SaaS companies keep enterprise, but at much lower margins. Everybody just pays less. Markets get repriced, yet the TAM will expand. Winners become the indie hackers, bootstrap founders, and incumbents who move fast and break things. Losers become complacent, incumbent SaaS companies. The great SaaS repricing is coming. What are our thoughts?
I think that comment, labeling it directionally right, it resonates for me. There's a few nuances in there. I think stability, that key word they said in there, that enterprise will stay with current vendors for stability. I do tend to agree with that. I think of the US market where relationships do matter, but also price point as a signal of ability to service and to deliver service above and beyond. And so I think companies that can continue to create and add value and back that up with high quality service, there will be some stickiness that comes from that. But markets more like the UK, which are much more merit-based, yes, there's an element of trust. So in the UK market, you have to have some brand credibility and trust. But at the same time, I can see maybe more so in that small to medium SME space, I can see companies churning. And I can definitely see the part on pressure on pricing. And like we talked about last episode, I can now genuinely see a world where we shift to outcome-based pricing rather than purely subscription.
Yep, I agree. And I think, it's the big incumbents like Apple who, have more power in this market, but it's just moving so fast. I think we talked about this last week. Even just keeping up with the latest advancements in GPT, Claude, Perplexity, and so forth. I'm trying to spend an hour a day just keeping my head up to date on what those three main platforms are doing. And I still feel like it's not enough. And it's not just reading the announcement, but then it's, okay, well, let me test it. And then how do I alter my workflow to then use that to further leverage my workflow? And it's crazy how fast things are moving. It's an exciting time to be an entrepreneur and a builder. And I think for me, the big takeaway, and I think there was another LinkedIn article, Don, which she commented on, which popped up in my feed, the algorithm knows, where it was, you no longer have to have a technical co-founder. Your AI can be that technical co-founder, at least to get to an MVP to test something. And I think as someone who's not technical, that was always a massive thing for me, which was that's a barrier. Whereas now I would push founders to go hack something together, test it, and then go and build.
Yeah, I agree, Aaron, your comments about the stability. But then I also agree with his comments how SaaS companies will keep enterprise, but at lower margins. So I think they will still demand a service. But if we know that there's just a step change in and the cost to service is just dramatically lower, and there's all these new entrants, I think these guys will just still try and push down the margins, like it's inevitable, but they'll still maintain the service. And Don, it goes back to, I think it was Munger or Buffett when they were talking about all the new advances in the original Berkshire Hathaway company in that industry, and how all the advancements in tech just flowed through to the customer. It never made their margins any better. So he was just having to buy more new machinery, fronting it up, but he just had no extra money dropping to the bottom line.
Yeah, 100%. And with my conversation with the portfolio, the majority of them are, I still think you have a business. The question we're trying to answer is, do you have a business of any value? because in this world, if the margins drop from 80 or 90% down to 20, 30 or 40%, we still can have a business. We just can't have a business of any value. And to your point, Jack, that value just flows straight through the company, straight through to the end user. And so part of what we're trying to establish is how do we maintain those margins? How do we maintain that value proposition? And it starts, I still think, simply with when you have the culture and the climate to innovate. And Ash, I agree that at least at the MVP phase that you don't need a technical co-founder, but I think for the next little while, those that do have some expertise, like we'll talk later of the person that's joined the team, Duncan, to help us with data science and AI, like working with him yesterday, he's got technical abilities and it was Monday. He was able to spool up stuff in like a few minutes that like it would take me a long time watching a lot of YouTube to try and work out. And so if you do have that technical ability, I just think you're going to be able to move a lot faster than your average person. But even those with technical ability, in one example, without naming and shaming, I did have a chat with the founder afterwards saying, nice person you've got there, but if I was you, I would find a way to fire them tomorrow because their mindset isn't what's required. Very defensive, pushing back. It's all too much hype. Wasn't willing to be looking at what's coming. Was sort of like, oh, it's not good enough today. It's like, yeah, okay, but look at the rapid rate that these agents are improving. Don't worry about today, like 12 months from now. But you just got this very pushback, and that is the mindset that kills companies. And the founders that are able to establish that early and make changes, as painful as they might be, are the ones that aren't going to get left behind.
Yeah, I agree with that. Look, if I had technical skills, it would be great. I'd be moving a lot faster. But I do think that you can hack together something to at least try to test your hypotheses now versus having to spend months and months trying to build something.
Yeah. So you'll be pleased to know when I used chat yesterday, I said, hi, chat, I'm in Australia, so please use Australian English.
Yes.
So my technical abilities to the moon.
But yeah, Ash, it's never been like easier or faster for anyone to hack together an MVP.
I think that element you touched on as well, Ash, around speed of like rate of change. And it comes back to something Brad Moran said at the Fireside Chat at Mixplace, which was his view, unless you're looking to get in and out in 4 years, the tech is advancing so fast. So his view was being able to exit within that 4-year period. And I think of people like Chris Milligan who build with the end in mind. They deliberately build something that will ultimately become a feature of someone else's bigger product and look to get acquired quickly and actually build to be acquired, like as in build the business to be acquired in terms of who's on the cap table, who's on the board. So I think it is a couple of key questions for me for founders that I take away from this is, one is, if it is that model, who would acquire or what would that acquisition look like? What is the bigger play? Or what will make me sticky and durable where I can have some form of pricing power or durability? And I think, Don, the nuance in what you said there could easily be lost, that the reason we focus on the humanistic capability is we don't know the freaking answers. But if we develop the competencies to be able to navigate change loops, to be able to navigate conflict, to be able to operate regardless of externality, then we're better placed to be able to navigate that. And that's why we focus on those things and supporting founders with those toolkits.
Yeah. And I'll put this in the show notes, but an article that I thought was quite helpful to frame up some of this was from Bessemer, who's one of the US's greatest VCs. But it says, roadmap, voice AI. Voice AI isn't just an upgrade to software's UI, it's transforming how businesses and customers connect. And I'll just read this first little bit. Imagine this, your flight has just been cancelled. You're standing at the airport gate trying to contact your airline's customer service line, but you're informed that due to increased call volume, call wait times are longer than usual. You're stuck in an endless maze of automated menus, repeating, speak to a representative. after every option fails to address what you need. When you finally connect with a person, they transfer you, forcing you to explain your situation all over again to someone else. Meanwhile, the minutes are ticking by. You're no closer to rebooking your flight or resolving the issue, and the prospect of staying at an overnight airport seems inevitable. This is stressful, expensive, and all too familiar. Like, we've all been there. Then it says, now picture this. You call the airline, and instead of a long hold or a robotic voice or a string of options, you're greeted by an AI that instantly understands your situation. It recognizes that you've missed your flight, suggests the best alternatives based on your preferences, and handles your rebooking. This is just one example of the promise of AI. And the thing that's really clicked for me recently is just the ability to parallel process at scale. When you have this technology in your customer service, your customer support, you can literally take 1 million calls at once that are all pulling off the single database, and you can suddenly handle that thing at scale. And that's what founders need to be thinking about for their business when utilizing this technology.
Yeah, totally agree with that. We haven't even seen the exponential curve yet that's about to happen.
Yeah, and I think the exciting thing with that example is, I think a lot of the times when you are on those customer service, patterns of press 1, press 3, customer service, they don't actually pull the data of the mobile phone number you're calling from, and therefore they're not pulling the reference number of the flight. And these AI agents are able to do all of that so that by the time they're actually talking to you, they already have half of the information. So you instantly feel more heard and seen, which I think gives people a level of comfort. Even if you know it's AI, you're like, okay, but you actually know this is my phone number. It was tied to this reservation. You've already thought about this. Here are your options. And I think that's the string of the ability to process large amounts of data about you based on points of contact and then make it human-like. I think that's the big unlock in these customer service things for me. The chatbots are shit, still are. So I'm much happier to go to voice.
Well, funny you say that. Let's have a look at one that may not be as shit as the ones that we've all experienced. But just on this article before we move on, there's a really great map where they actually give you the whole voice AI market. It gives you the applications, speech to text, middleware, and models, all of the companies, all of the logos. For the YouTube listeners or watchers, a shout out to Jake, regular listener, who only just found the YouTube version and has now able to put a actual face to the voices. Jake, we were discussing that earlier.
I want to know what you thought I looked like. Please send in comments as long as they're positive.
Yeah. So there's the map for those watching on YouTube. So chatbots are shit. A week ago, I would have absolutely agreed with you. You won't have time to look at this, but great friend of the show, Adrian Bunter, great investor out of Sydney, provided a link to a Sydney-based company called Decidr, Decidr, no E. That's how you know that it's cool. And so what I've done is I took the 2-hour demo video, and on our tribe account, I've chunked it up into 5 different videos of just the little segments, just to try and be helpful for the portfolio so they don't have to listen through all of the marketing guff. I'll play this for you now. Have a look at what this particular bot is able to do.
An active case study that we have now, and we're going to get into some of the kind of processes of how we worked with Edible Beauty, a small business here in Australia. We created an AI parallel with Edible Beauty. So here are the things that are connected to the Edible Beauty AI parallel. You have Klaviyo, which is an email marketing system, Fishbowl, which is procurement. You have TikTok, you have Instagram, Meta, you have Google Ads. Those are the outbound advertising platforms. And of course, you have other things like CSV files, videos of Anna in presentations, PDF files, you name it, got dumped into the AI parallel. And remember, that's the only process that we had to do. And we created Ava as the interaction layer to sit on top of this platform to be able to make sales on the Edible Beauty website.
John, you're on mute.
Why'd you tell
I think
him?
that's...
Tom, we couldn't
You
hear
guys-
a single thing that was said either. No, I'm only kidding.
You guys are so looking forward to me being replaced by a bot, aren't you? The key point there is that what they're selling, at least, and it needs to be validated, is that you just dump the data in and you connect to API. There's no structuring to it, that the ability just to connect all of those systems exists now. So I'll just keep going.
So this is us demonstrating Ava in action. So this is a typical scenario where Ava introduces herself, and you can see she's quite friendly and pleasant, which is to my delight. She asks the customer for their name, and this is Pravesh. So she does then offer that Pravesh will either take a consult with myself, which is fantastic because we're maintaining that personalization, or can take a skin analysis for a really customized recommendation for his skin. And she then goes through and asks various questions to really determine the skin type. She then mentions one of our ingredients, and she's very sophisticated. She ends up answering the question about what that ingredient is in a very sophisticated way. We haven't told her this. She just knows. She knows all about our complex ingredients, which is fantastic. And so he then proceeds and asks about the benefits of turmeric. And we use turmeric in one of our serums, and there's a lot of nuances around turmeric. It sounds like a simple food product, but there's so many benefits when it comes to the skin. And Ava, of course, knows all of those benefits and lists them out. Again, without any guidance from us, she has this information. We're gathering our customer data, which is so important. Previously only really using surveys ad hoc to collect this information. And then she's also very on brand. She's asking about the wellness products, which are so important to our philosophy and that holistic view of the skin. She goes on and determines whether he needs a sunscreen, basically. Some more questions. She's very quick and fast. There's not much of a delay in terms of her answers. Asking about the eye area. She's just gathering all the information. So now she's come up with her product recommendations, which is fantastic. As I mentioned, there's developments to this now where this is an inside experience. This can be added immediately.
I'll put the rest of it in there because it's similar stuff. But the key thing that jumped out for me is, on the basis that this is correct, all that happened was a connecting to the existing data, and this bot was able to start to get really sophisticated in its answers. What's also important, there's another tool in this product suite where all of those questions are enriching the CRM. And so suddenly this bot is not just about answering the customer's questions, it's also populating all that CRM data. He's got an existing order in the system, which it already knows about. So to your earlier point, Ash already understands, and so is able to update in real time where that other order is in. And then it's very impressive of the way that it's handling. Now, from a multi-channel approach, what can then happen is if you are sitting in a meeting, like I sometimes do, you could be using the chatbot quite happily. Or if you want to talk to someone with some of that AI voice technology now, you could be having that same conversation. Like I've got, not in the Tribe portfolio, but one of the companies that I've been invested in for a long time has really, really struggled. But I'm actually really now excited for the opportunity that they have in front of them, because suddenly they can do things at scale using this technology that they've not been able to afford to do in the past. And if they get on top of this early, they're going to win and smash the shit out of their competitors. If they don't, it will accelerate their demise.
Where is it being stored? Who owns the data? Can they then unsell the data? So many things. I just want to know it all. We should have a demo. I want to.
See, for me, I'm quite happy to sacrifice privacy for convenience. So I look at my mum, who is the polar opposite, and I think there's a generational thing, and there's different studies suggesting that our kids will be even more on that edge of, who cares about privacy? It just sent all sorts of information on Snapchat out into the ether. I think for me, the beauty of something like this comes in when it knows all of my information with that particular company and can actually be up to speed much faster. So I don't have to re-explain things. Undoubtedly, it's probably going to be like a persistent instance. So I can pick that thread up 3 days later without the onboarding of re-explaining information. And for me, even just watching that then, Don, I keep thinking of how could we use something like this at Tribe for high net worths who are coming into the VC space to be able that educational part of what we do, where they can ask the silly questions, they can ask hey, when you say IoT, what is that? Explain to me your thesis on XYZ. Like to be actually able to scale some of those parts, but do it in a safe environment where they don't feel like they're asking the silly questions. And then I also think about the question I think becomes at some point though for us is investors fundamentally want a relationship with us. I think it would be really good for portfolio documentation, Jack, like the questions we've been having this week from some of the investors chasing different documents, having the ability for someone just to ask those questions and get them in real time would be such an efficiency gain.
Yeah. And like we talked about earlier this year, it's if they want to get an update on a performance of one of their investments, just being able to ask Sam, Alexa, whatever we call it, oh, how's this going? Oh, well, here are the latest notes. Don had a call. Looks like it was going really well. Here were the couple of things that we pointed them in the direction to go and investigate, like that type of conversation, which can cut down the calls to being, the calls to being more relationship based versus having to ask those little questions. I think that's where we get the uplift in our leverage in a day, where we still want to have those relationships. If we didn't want to have relationships, we wouldn't be in this business, right? Like that's all what gives us energy is building those relationships. But having that, and then also for each of us to be able to ask questions. So if we're in a meeting and someone's asked about the latest of a portfolio, and I haven't had that update from Don yet, but Don's put it into the database and gone, what's the latest on this? I can immediately get that. I think that's the power. I can see you smirking, Jack.
Yeah, that's the problem. The input. There's no data going in. There's going to be no data coming out.
You shut your mouth when you're talking to me.
Give him some credit. Look at how much he's improved in the last little bit. It's like a...
Here's the thing, Jack.
But if you would voice note to it, Don, and say, here's everything.
Exactly. Have you checked out my Notion pages recently? With all of the notes and after the meetings, and then now being able to use voice to text?
See, I'm waiting for the wearable version of this that's just listening to my conversations. So when I sit down with someone and we're having a conversation and say it's an investor and they're asking how's XYZ going, to have a real-time almost earpiece or something feeding me the insights.
No, you joke. There was a guy on, was it LinkedIn yesterday, who had doing an interview for an AI developer role, but then had like the AI listening and then feeding him how to answer all of the technical questions. What this person's going to do once they get the job, like, I've got no idea.
The AI will do his job. Like,
look, full credit to him. If he ends up taking on a job and completely outsourcing and automating it with AI, if the task gets done.
What most investment bankers are doing now. Yeah, it's fun. But I do think there is still a level of understanding. Like I was building a model for 11.2 last week, and I was just using GPT as I would have used an investment banking colleague back in the day. And it made a lot of errors, but because I had the understanding, I could go, no, that's not right. You've done XYZ wrong. Can you fix it? But then the part that was great was, this is the situation. I'm unsure how I should think about X, Y, and Z aspect. How should I capture them in the assumptions? What's the flexible formula that I could use that doesn't give me a circular formula? And then that it solved that. And because I knew the Excel, but I didn't know the Google Sheet, it would fix it. And I was like, oh, that's Jack. Oof.
So Jack, are you suggesting that when I posted this, I shouldn't have just said trying to get your top sales performer to use a CRM? It should have just been me.
Hey, look at me.
What's
look
your
at me.
talent?
No, hey. No, you need to look at me.
That's so accurate, Don.
That is the best metaphor for salespeople not using the CRM.
It's been one of my best performing posts.
Far out.
It's good when the podcast is both informational but also performance review.
And it always seems to be one directional towards us.
Yeah. It's the old versus new.
I am the one who pulled all the data out of the CRM, so I will take that.
Yes, which has now prompted me to question why we have a CRM. So hence we're now jumping on a call with a different CRM that is hopefully cheaper.
I'm very happy in a Google Sheet.
Hey, it's working.
We have more data in there than before.
It is an interesting thing that it is a CRM, but the way we actually use it is actually for our workflow for managing events, managing the podcast, managing the pages. Now, in this Decidr app, I won't do it now, but I'll get you guys to have a look at it. Did someone just come flying through your window, Jack?
No, the tradie's doing something out there. I don't know. He's putting it in his hands when he wants to drop something.
There's actually a CRM automation AI that these guys have. But what this always on CRM AI does is it's connected to your CRM, and as long as you've got an AI, API, it can be anything. But then it connects to pretty well every interaction ever. The chatbot, your email, you can put voice notes, like anything you dump into the database. And what this always on CRM is doing is just scanning for information to update records. And I'll put the demo in there because it's really bloody impressive, because it just fills out that CRM. And you could do it as a voice note or just from your email. If you get an email from a client with an order, it'll update it. It's so that's why, Jack, I will be able to just skip that whole process, and it's just going to leverage the unbelievably amazing work that I undertake that sometimes just goes undocumented.
I'm here for that.
Yeah, same.
The grin that's on your mouth, if I was there, yeah. Okay, so
what's the ice skater, the Aussie ice skater that everyone fell over?
That's Stephen Bradbury.
Don is entering the era where he is just going to totally outperform everyone because everything he does and everything he hates doing is going to get done for him, and Don's going straight through.
He's getting the A taken care of.
Yeah.
Hey, it's genius.
Look, I am going to take small correlation to being where I started as well.
Look, more time with portfolio.
Correlation, but yeah.
Okay, Ash, where's the little trophy?
Love a gold star.
More time with portfolio, more time being annoying. But you're right, next Monday, got an all-day strategy session with like 12 of their entire team from one of our portfolio. In the future, the AI will just be listening, and all of the stuff that gets done will find its way in real time to where it needs to find. It'll give assessments of different people's tone and engagement. It'll give ideas for leadership improvement. Like, hey, I'm all for it.
And the workshop summaries, that's the killer. And then the like infographics, it can make from the summaries. I tried one with GPT yesterday. It's so close.
All right, let's change tact before we have to change the name of this podcast to just talk shit about AI.
Yeah.
So from a previous episode, Scalare Partners did in fact raise its minimum, so about $4.3 million to backdoor onto the ASX. The public offer raised $4.3 million at 25 cents a share, issuing 17 million shares in its reverse takeover of confectionery maker Candy Club. I must admit, if I was to ever do a reverse listing again, a chocolate factory would be the way to do it. The Scalare prospectus proposed spending $1.6 million and between 1.6 and 2.4 million of the 4 to 8 million raised on investments in new and existing portfolio startups, and between 1.2 and 3.7 million for working capital. So on a pro rata basis, the 4.3 million that they've raised means there's around 2 million for working capital and 1.3 million for investments. Now, we'd previously discussed this because the way that they marketed this was venture capital is broken. Now, of course, in no way are we defensive or immaturely having a complaint about that sentence. But venture capital is broken, according to Scalare Partners CEO Caroline Breeze, and she has a proposal to fix it. I think people don't have the opportunity to invest in early tech and access it via a VC model because there's barriers to investing, and it locks away your money for 5 to 10 years until there's a liquidity event. We want to break the mold. Bree says we think it's outdated for tech scale-ups and startups, and we want to make it available and accessible to all sorts of investors like retail investors. The problem here is that this structure and what they're actually doing inside this vehicle doesn't match that ambitious statement. Like, of this $4 million raise, according to this article, there's around $1.3 million that's going to go into early stage investments. So you're not getting anywhere near a pure play. The majority of that stuff is getting spent on working capital. And then they do programs, they do services, they do so many other bits and pieces. And if, as we've discussed in the prior episode, if you confuse, you lose. I have a feeling that this proposition for the market is going to be a little bit confusing. And there's so many examples as to why private assets in a listed small cap ends up as a disaster. But let's hope that this time round they're different.
Yeah, totally agree. So the comments I made previously, I still stand by, which are the same as what you just iterated. Like, for me, number one, private assets in a structure that requires public disclosure, that's problematic. But two, like, to the comment VC is broken, do they mean from a fund manager's perspective? Because what they've fixed for is taking a massive chunk out. So the ratio of actual capital deployed, or OPEX, let's say, to capital deployed is massively out of whack to the standard 2 and 20. Like, they're sitting closer to, it's over 50% going out as OPEX rather than capital in. And then the question becomes the use of that OPEX in the courses, programs, everything else that they're doing. Will that actually add value to cause outsized returns in the fund side? But my kind of read of what they're doing is those programs aren't necessarily related to exactly what they're investing in. So I just think it's a problematic model. And if they were genuinely interested in going and servicing more retail investors into this space, there are models for that I think would have been better suited.
Let's not throw the baby out with the bathwater. There are some parts of this business that I really like, and a shout out to Crystal, who heads up and drives their Tech Ready Women program that's within Scalare. We've had a couple of chats, and I'd like to find a way for Tribe to support that more. But yeah, there are component parts of this that I think are going to add a lot of value to the ecosystem. But as a whole, there's lots of moving parts, and that scares me. So let's jump to a bit of news. This news isn't tech news, but I think there's a lot to learn. I don't know if you know, but are you aware that Donald Trump won the presidency?
No, really? I didn't even know he was running.
So a lot of people, when I got back from the US, going, oh, you were at the US during the whole election time? Wow, that must have been crazy. Like, did you feel safe? I was like, we didn't even know there was an election.
No.
In these states that we went to, they're so Democrat, and Aaron, you've got a couple of points in the notes there. They're so disconnected from the reality of the majority of America and had no idea this was coming that we didn't feel that there was an election at all.
Yeah, everyone we spoke to in San Francisco and Denver, so California and Colorado, was very much of the view Trump will not get elected. The only
Which is when I knew he was going to get elected.
Yeah.
Everyone was so strident. I'm like, didn't you learn this lesson the first time? It's like, fuck, he is going to get elected.
Yeah. And it was the same. We had a mission to the UK right as the Brexit vote happened, and it was exactly the same. Everyone in London was adamant. No, we will vote no. And then next morning, everyone's in tears because the vote had gone the other way. And I think it's that reminder. What I took away from the US trip is the way that we now live in bubbles. And it's by virtue of how people, particularly in places like San Francisco and Denver, a lot of people have moved there out of a common interest. And so they tend to have a common set of values. And so there's an echo chamber. And then we live on social media that's optimized to feed whatever interests we have and just to further push us apart. And we saw this great chart of the dichotomy, like how much the political views are separating in the US, but it's true of everything, the way we're just in these echo chambers. And coming back to Australia, having, again, to talk about AI, like having seen over into a different bubble of thought around AI, and then coming back into Australia and hearing how people talk about AI here, most of the market here is in a bubble where they can't even skate to where the puck is going because they have no clue, because all they can see is the limited set of data that they know. And so for me, it was a good reminder, we've got to get out of our bubbles.
I'm well aware of my bubble, and I choose to be in it a lot of the time. But no, I totally agree. Like, I was very conscious in my choice to live in California. I was very conscious in my choice to live in New York. And then when I came back to Adelaide, I was very conscious to move back into the bubble that I grew up in, because if I'm going to live in Adelaide, I'm going to live in my beach bubble. But I do think it is very important that you are having access points to different markets, to different opinions, to different viewpoints, so that you can have a collective and holistic view of what's going on, whether it be tech, whether it be news, whatever it may be. And I think it's hard to do because you are tired at the end of the day and you don't want to be having a confrontational conversation sometimes. But that is what makes us better and enables us to have deeper and more holistic conversations than the AI chatbot who's trained to tell you what you think and be in line with your views. So yeah, travel is one of those things that I think is the best learning experience anyone can have. And so I will continue to spend most of my income on travel for my foreseeable future.
What is it? 4% of Americans have a passport? Look, I think the lesson for founders is just a constant reminder that it's never the best product that wins. It's never the best service that wins. It's the one that's the most simple to understand and that resonates with your story. People engage when they read or hear words that resonate with their story. And we see a lot of startup founders get really passionate with the product or the service, and they just can't find the words and the message to resonate with others. Now, in the US, a lot of America are sick with being told what to do. They're sick of having a worse standard of living than their parents. They're sick of a whole lot of different bits and pieces. They don't believe America is as great as it once was. And so when a populist who's from outside of the environment promises to break it all down and make America great again, as we've seen, they're willing to forego a whole lot of their rights. Like the women vote for Trump was incredible, given what's about to occur in a whole lot of those states. But they're willing to forego that because actually there's a whole lot of other things that resonate more with their story. And I think the lesson for founders is it doesn't matter what your product and your service is. And often for a lot of founders, you know your customers' problems better than they do, but they haven't connected yet with what their problem actually is. So if you use language that's about what their problem actually is, but they don't agree with that or understand it, you're not going to get that cut through. And then you see a lot of founders getting really frustrated. So what you have to do is almost breadcrumb it. You have to use language that resonates with them and gets them engaged and gets them in the tent. Then you can build some trust, and then you shift their worldview. Then you shift their perspectives. But yeah, this is another important lesson.
I'm reminded, Don, of that video Don Miller put out when Trump ran the first time, and he was talking about whatever you think, regardless of what you think politically about the two, what does Trump stand for? And everyone was able to say, make America great again. What does Hillary Clinton stand for? The audience was just silent. And just that clarity of messaging, and particularly with a demographic that's disenfranchised. I heard a stat yesterday, 11 million Americans are on food stamps. There is a big part of the population that is just genuinely believes the system is broken. They're disenfranchised from any sense of trust in politics. And so using their own words resonated.
Yeah, the marketing, PR, all of that has been bang on. It's clear, it's simple language. And I think, Don, the breadcrumbing is an amazing analogy where he essentially planted breadcrumbs along the way like Hansel and Gretel, but in the sense of he then made the people who were finding the breadcrumbs think that that was their idea. So he didn't take credit for it either. And I think that is part of the strength of that relationship with the people and the voters. It's going to be a interesting 4 years. I think that the other thing is that humans are designed to not think too long term. They're designed to think in short term because we have to think about our survival. And I think sometimes that gets lost in campaign communication, but also sometimes when you're selling something that people don't think is reality yet, that messaging as a founder can be too abstract and not simple and cut through enough.
Anything you're in, Jack?
No, nothing to add there.
Make venture capital great again. Now,
No.
another
Isn't that Scalare's tagline?
Fuck, that's so good, but you got to cut that.
no, it's transparent VC. Another example of simplicity and clarity, which I just thought, and especially where like all that's old is new again, is there was an article, and the headline is Fintech offers bridging loans in minutes as Citi backs them with a $250 million facility. So the article that was in the AFR by Paul Smith, Fintech non-bank lender Bridgit has secured a $250 million facility with Citi, so that's Citibank, which its founder says will help them double the size of its loan book. Now, what this is just a company that concentrates on bridging loans. If you've got the equity and you haven't sold your house yet and you want to buy a new house, you can go and get a bridging loan, which have existed for hundreds of years. But now, because they've really gone after this niche, I like the name, Bridgit, like that's clever. They've now been able to get called a fintech, which I jumped on the website and had a bit of a play. They're definitely using fintech tech in it. Like they're clearly doing very fast income verification, KYC. There's a big integration of fintech stuff behind the scenes. And then they're coding themselves with that, but they've effectively creating what looks to be a great little business out of this niche, doing something that pretty well every fucking bank does. But these guys do it a lot faster, a lot more efficient, and it looks like they're going to be able to charge a margin. So to me, this is a really great example of where you get niche, you get a really clear message, you integrate the right tech, and then you can be called as a fintech and raise money at the valuations of a fintech.
I chuckled. I was like, this is clever. Clever of the sense of packaging some neat things up and creating a fintech out of something that has been around for generations. Although if they can manage to have a bridging loan at 8.5%, most of the banks are charging upwards of 12 to 15%. So if they can do it at that rate, then go for it. But I definitely chuckled and went, okay, good name, good wrapper, good marketing, clear messaging.
I'd like to see a version of this for private capital, like a tool. It's a stat yesterday. I can't remember the exact number, but the increasing portion of financing that's coming from private capital. When I think of some of our LPs and where they're allocating their capital and what they're doing at the moment, it's a rising part of the market. And so I can see an opportunity for tools like this to exist for them. But yeah, I had the same reaction as both of you. But well done to them. Well played.
Yeah, Aaron, I think there is another fintech in the market that provides non-dilutive funding to startups. Tractor. Didn't they raise the fintech multiple?
Yeah, 70 mil, I think. If you get the messaging right, the valuation will follow. The other thing that's good here is they've chosen a product where they're able to use a channel. What's getting them their big growth is the brokers. And that really came out loud and clear in our US mission. Everyone we spoke to said, if you want to get in, find a channel, that's your path to scale. And these guys have done that really well. Now, it's not all beers and Skittles for everyone in the market providing money to people. It was sad to see that Equitise, which was a crowdfunding platform, one of the early ones, has fallen into administration. Crowdfunding platform Equitise has been handed to voluntary administrators as after founder Johnny Wilkinson failed in his own attempts to raise $500,000 in a bridging round. Equitise managing director said that the move gives the platform a chance to regroup. So what is good, I think they're trying to use the administration process to actually get out of administration. Whereas in the vast majority, I think 90% of the time, administration just is a quick path to liquidation.
Yeah, it's sad. I definitely want to see things like this exist, and it's sad to see a platform or any investor, failing. This is what we predicted. Like start of the year, we said there would be fewer firms and operators in VC by the end of the year and investing in this space by the end of the year, and it's played true.
Well, and I think there's a few things that are actually going to challenge the crowdfunding sector a little bit more. We had an experience ourselves with one of the portfolio companies that, in my mind, has left a very bad taste in my mouth because it was a bit of a disaster. The article also talks about an example, and we're starting to see more of these examples play out. Concerns around the value and fine print on shares in crowdsourced funding offers also came to the fore when Sydney bike helmet tech company Foresight was acquired by NASDAQ-listed camera business GoPro in January this year. The CSF investors, so the crowdfunding investors who backed Foresight, had to take a 90% haircut, even though the other investors ended up booking a gain. Foresight had raised $1.3 million from Equitise in 2022 at a $24 million valuation. But when they ended up getting sold to the NASDAQ-listed company, reportedly for around about $20 million, the CSF investors were offered just 2.9 cents a share, which is a loss of around about 87% on their investment. This is one of the things that we've been seeing with the crowdfunding environment, because it's going out to retail investors, a lot of whom haven't, the word sophisticated, I think, is thrown around too loosely, but they haven't had the experience in evaluating companies, or what's a good multiple, what's a good valuation, what are the risks, what are the future here. If you were to survey people in our industry and founders, it is a common belief, and we've now seen it, that you can pull off unsustainable valuations from retail investors using these platforms that are not commercial. And what's going to happen is more and more of these retail investors are going to get burnt like this, put in at 23 cents, 2 years later, 2.9 cents. And there's a lot of other examples, which we don't have time to go into here, of this kind of thing happening. What you're going to find is you're going to burn all of those people out of the crowdfunding space, and they're just not going to support these crowdfunding campaigns, and that's going to be bad for everyone.
Yeah, I definitely worry about how this poisons the well for others.
Now, on the theme of companies falling into administration, another company this week, this was a Blackbird-backed company, not just Blackbird, a whole lot of others. They'd raised $63 million in venture capital. Sydney retail startup Hivery was handed to the administrators last week after 9 years and $63 million in venture capital. Founded in 2015 by former Coca-Cola execs and a data scientist, it grew out of a hackathon that brought them together the previous year. The startup's proprietary machine learning applied mathematical algorithms and were developed in partnership with CSIRO's Data 61. The platform uses AI to optimize category management and merchandising for retailers. Their cap table included Coca-Cola, which kicked off the business with 1.5 million. Blackbird and AS1 reportedly tipped in another nearly 4 million in April this year. So you can't say they didn't bloody try. So again, a demonstration that shitloads of money, big investors, doesn't actually make it all that easy to find product market fit. And sometimes, and it'll be interesting to see the post-mortem here, sometimes having too much money actually is the reason why you weren't able to do it.
Yeah, I met Jason and Frankie back in 2013 when they were running the Coca-Cola accelerator, and they were good operators. And it's sad to see this one fail. I feel like they've, I don't know, just the little bit I know about them, I feel like they would have given it a bloody good crack, and it hasn't worked out. So I've shot them a message this morning, but yeah, sad to see. It'd be interesting to actually understand what happened and get into the nuts and bolts of it.
Ash, Jack, comments? Jack's still writing a list of all the things that I haven't done. Now, as we've seen, finding product market fit can be difficult, and sustaining it can be difficult. I think in the 2021, 2022 period, Equitise and other platforms would have said, we've got product market fit, we're here, we're going to survive. But there was a post by a gentleman called Brendan Short that I think resonated a little bit, because founders often don't build things that enough people want to make a viable business. And his post was, a go-to-market engineer who can build anything is worth $1 million. A go-to-market engineer who can figure out what to build is worth 100 times that. In business, the GPS creates more value than the engine. And I thought that was just a good way to look at it, because it's not just your engineers, but the founders as well. It's not just an ability to build something, but it's ability to build something that people want and you can create a real business out of. And that's part of the challenges of VC. That's what we're trying to establish. Are you actually a good builder, and do you have a good GPS so you can work out where we want to go?
So true.
Yep. Clean, simple language, to the point.
Now, I hope a company that does have a good GPS and does know where it's going is Gilmour Space. given they've finally got approval to launch their rocket.
Yay!
Woohoo! It's freaking exciting. I love space, and this is awesome to see. The question on my mind for Gilmour, given what SpaceX is doing to bring down the payload cost, and I dropped a little chart in there in the notes, like the cost to get a kilogram into low Earth orbit now with Starship, the latest SpaceX rocket, has dropped to $20 a kilo. It's down 1,000x, if not more, actually far more than that, than the NASA days of the space shuttle. Whereas Gilmour, I looked their data up this morning, theirs is 32,000 per kilo to get a payload into space. So I get that we have different launch trajectories here, so different orbits, and I get that cost will come down.
The Starship's number, did that come from Elon? Because if it did...
Well, the data comes from, there's a site that actually tracks all the rocket companies and their payload costs. But where they source that information from to form that view is potentially questionable. So yes, look, it could be up there with these autonomous taxis.
Yeah. Well,
I think it's amazing to have a sovereign capability though. We have unique trajectory into orbit here. Now we've got sovereign capability. We've got amazing space companies. I think it's great to see, and for it to actually happen, very excited.
With what's happening in the world, I think you're right, Ash. Even if they were 1 million times more expensive, I believe actually that they're going to be well supported locally, because I think in the geopolitical environment and the direction the world's heading, I think it's important that we're able to do this stuff and not rely on others.
Totally agree. And that's what the other part of that article was, the Southern Launch facility up north, and that getting funding and approval, which is fantastic. I think the more we can invest in launch capabilities, both rocket, but also particularly launch facilities, that's setting up Australia for a whole new industry that's just booming, or going to be growing even faster.
Yep, 100% agree.
All right, let's get into themes of the week, and we'll start with Jack.
Oh, I actually don't have a thing. Can one of you guys go, and then I'll think of it?
Absolutely not.
I actually don't have one right now. Like I'm not even.
We've covered your ass the last 4 weeks.
Theme of the week. Don McKenzie not doing his fucking admin shit.
Jack not coming up with a theme.
Yeah, sorry. I wasn't even looking at theme. I was thinking we were going into Sharts.
Hour we've been on. Come on.
I know. All right, Ash, you go. I'm
going to call the theme. Mine is the pot calling the kettle black of people not doing the things that they were supposed to do. How's that one?
Yeah. That is so fair.
All right, Ash, you go.
The theme of the week has been creating unique value for investors and founders, and how that can form in different ways. So just had a call with a contact over in the US who's also in the VC space, and I was chatting to her about unique ways she's been able to create value beyond events and newsletters. And something that she mentioned that I'd be really interested to get feedback from our listeners is around creating boutique kind of group chats. So having a space where we can facilitate connections of small family office, or people who are interested in B2B SaaS, or people who are looking to learn more about AI, and just creating these well-crafted communities, but in a small way. So would be interested to get some feedback on that and see how Tribe can help create some of those conversations.
I love it.
Yeah, I love that. That's really cool.
Aaron?
Mine is this. So again, it's AI related, but this feeling of naivety, which can be a virtue for founders. But I look at the conversations I've been having with investors and different fund managers and wealth advisors and founders of all different scales this week, when we're talking about AI, and how they're looking at it through the lens of how things are right now. And I don't think they have an understanding of what exponential growth looks like. And so they're making decisions on the basis of what currently exists is true, and therefore, and I think that the shock to the system that's about to happen to so many across so many sectors, they're just not aware of. And Don, this goes back to what you said in the last episode about the Uber drivers sitting there next to all the Waymos. And even when it is right in front of your face, like they look at just look at AI, how it's grown over the last 12 months, even if that's all you look at, rather than looking at its current state and saying, oh, yes, but it makes these mistakes. And, oh, yeah, no, it'll never do this because of how it is right now. You've got to look at the growth curve. And I think not enough of us are actually capable of doing that. Like extrapolating to the exponential it's not linear.
Waymo raised another $5.6 billion last week.
Wow.
And Aaron, just to add to what you were saying, I think in addition to that, you've got to look at what is limiting the growth. And the reason this technology isn't going up and to the right, like, is because there's some limiting factors, and that's silicon and like the infrastructure for the data centers. So the tech's there and it's going to keep learning on itself, but there are these physical factors that are limiting it. But when we take that away and you assume there's the bottleneck won't be there forever, like we are just going up and to the right, and you have to assume it's going to be 100 or 1,000x better than today.
Totally agree. Like some of the stats that this economist shared yesterday, it was like for an EV, like a Tesla, to be carbon neutral, takes 120,000 kilometers, by which point you need new batteries. And so he was talking about lithium prices and where that's going to. He was talking about, this fixation we have on renewables, where renewables have to be located, you then need transmission lines. That equates to 150 million kilometers of new transmission lines that are needed. We don't have that much copper on the planet to do that. And then you look at the data centers and what Joel was talking about, basically needing mini nuclear power plant facilities. It's like all of these things, they will be solved for.
Yeah.
But the rate limiters right now, and to your point is spot on, Jack. Like these things will be solved for. And more than likely, we're going to end up nuclear. And Australia has such an opportunity in this space with our landmass and everything else. Like we should be owning the infrastructure that will be empowering all of that.
Yeah. All you have to do is look at the recent investments in AI data centers, or just data centers in general in Australia. It's booming. And Jack, this doesn't count as your theme.
Yeah.
Yeah. I'm trying to think, like, theme of my week, like I've got a lot of things going on, but the theme isn't really work related. It's actually outside of work. So this whole renovation, I've got absolutely no idea, like what's a good price to pay, all this, etc. But like the takeaway for a founder is like just getting comfortable and getting as many data points as you can. So you've got a good idea of what you are doing. And like that can be whether or not you're paying the chippy, the market rate or below rate, or like going which supplier. But you don't need to know the industry, and you can really short circuit that by just chatting to 10 different people to get different viewpoints. And then you get a really good idea. But yeah, it's just funny how the start of the week I had absolutely no idea, and now like quite comfortable with all the prices and everything there.
And how to use credit cards to get free money.
Yeah. Thank you, Ash.
I saw you put into chat now, and I've given it to my wife. Before you go and buy anything, go to chat first and ask if there's a discount code online.
And a dupe. Have you used dupe.com yet?
Dupe.com? No?
Yeah.
No.
It's the best. So I find, expensive furniture, it finds me. And then I wish I was bidding.
Oh, tell me your two incomes and no kids without telling me your two incomes and no kids.
I'm totally going to try and use that excuse on Lauren. I didn't put it, found me.
And so you just take the URL, you go to dupe.com, put the URL in, and it'll come up it'll scan the internet and it'll find the closest thing to that, whether it's, now they have it for clothing. So yesterday I saw one on TikTok where they've now created a dupe.com version, but for clothing. So if you see a dress you want, Anna might love this. Say it's a new Beckenbridge dress, it's $400 new. You can put the URL in, and then it'll scour the internet for where you can find this secondhand or where you can find it at a cheaper price.
So are there going to be people that put Blackbird's URL in and they get us?
I mean, we could play with the Trio Cat route.
The TV version.
The TV.
But we're still software. We're still foreign.
If you want investment, you've got to add 6 more things to your cart.
Mine is just, I can really get a picture now of how all of our real life events, the missions, the offsites, and then the events we do at the different places, I really see where their value proposition now, but how the AI tools are going to supercharge getting that, supercharge the value of that. and how we're going to be able to get leverage as a small team. And the theme there for me has just been just trying to consume the content, not to go, I'm going to copy that, but to give inspiration of, hang on, this is how we could use it. And then having Duncan on board, and I'd like to, in the coming weeks, have Duncan join us on the potty just to talk data science, AI tools, that kind of stuff. When you've actually got someone like the poor bastard got a few messages from me at like 3:30 this morning. When you've got someone you can bounce off some stuff.
Hey, did he respond at 3:30?
No,
I was gonna...
but soon his agent will. He'll just have an auto fuck off at 3:30.
No, go away.
But when you've got someone open-minded that is like is a sponge, who like genuinely actually loves what we're doing, this space, this idea of helping entrepreneurs, and understands where they sit in the value prop of being, if we can have more tools to find more great entrepreneurs, which means more great products, which means more great investors, and like is hungry to be part of that. Anyway, that's multiple themes.
I also think that the more that we are using AI, chatbots, voice, whatever it may be, post-COVID, where, well, not so much in Australia, but particularly in the US, as soon as you could go back to those real life coffee chats, those meetings, the value of those connection, that physical connection of being in the same room, was far superior to them what it used to be. And I think we're going to have the same thing with this AI, where people are going to crave the ability to actually connect without these tools as well. So that's where our missions and our events, those will become even more valuable. Yes, we'll have the AI to be able to help us create a more engaging, more intelligent, all of these different things in terms of the content we're providing. But I think the connection and the well-crafted list of people who will be in those rooms, that will be the magic.
So like next week, we're catching up with one of our largest shareholders. Now, the first part of that conversation inevitably is an update on the portfolio support work, doing all the bits and pieces, and bang, before you know it, 45 minutes is gone. In the world we're heading to with these tools and the ability to record and whatever else, they in real time will have an understanding of the portfolio, what we think about their performance, what we're doing to add value, what the roadmap looks like. And so there'll probably be a little bit of conversation about, I saw this, I saw that, or I'm keen to learn more. But then we'll be able to get to the proper relationship stuff.
I totally agree with that. Like when I think about those types of conversations, it's one thing for an investor or shareholder to read a report, but then they want interactivity for understanding. They want to engage in Q&A and unpack the thoughts. And so to have an AI system or tool that they can have those types of interactive conversations with, and then when we spend time together face-to-face, it's for a more meaningful or substantive or like ideation aspect rather than understanding past performances and past data.
Well, let's bring the conversation down a notch, because it's going to be a long time before an AI can bring this level of value. So I just laughed at this. So it's B2B marketers. Dad, why is my sister's name Rose? Because your mother loves roses. Thanks, Dad. No problem, Sapia. So how cool is it versus your age? Like, this is a pretty busy graph. So coolness, left, age along the bottom, 0 to 100. And it's measuring. Zoom out.
Yes, because I
when in doubt, zoom out. Okay, you want to see everything together?
Yeah, thank you.
So it's got things like living alone, complaining about young people, dueling, being good at patty cake, being told that you look older, celebrating your birthday, skateboarding. So like complaining about young people is like just this linear up and to the right. So the older you get, the more you complain. Being good at patty cake is like this between 0 and 10, this wild all the way up and then all the way down. Celebrating your birthday, like it's every year up until what, the age of 20, and then suddenly it's only 30, 40, 50, then nothing, then 70, and then nothing until death. Living alone, where's the living alone line? How cool it is. Yeah, so there's that middle-age hump where it's pretty cool, but then you get lonely.
Yeah.
Don, I just want to know why you were Googling this to find this chart.
No, like expensive furniture. I don't go
found
looking for it.
It found you.
It finds me. So something a bit more serious. So this is the speculative mood between NASDAQ and Bitcoin. And even though Bitcoin has had a big run, it is still actually behind the NASDAQ's jump. So is the NASDAQ going to pull back, or does the Bitcoin have to come back up? Now, in terms of the NASDAQ, its level of volatility at the moment is really, really... No, that's not right. I can't actually explain this chart. It's a cool looking chart with a whole lot of arrows for listeners at home. I'm not even going to attempt. This is a reminder of the number of years required to double your money based on the average, based on the return. And so if you're earning 1% a year, it takes you 72 years to double your money. If you're earning 10%, it takes you 7 years to double your money. But you can just see how even a few percentage points makes a big difference in that time it takes to double your money. Helpful, I know.
It's actually a good one.
Well, it's good for founders to understand compound growth rates.
Yeah.
Yeah.
This is a chart for global stocks excluding US small value versus the USA large caps. What it's just trying to show is that on a relative basis, the small cap value is actually the lowest it's been since before the 2001 tech wreck. Now, we've still got a little bit more because it bottomed out there at 0.18 and we're at 0.22. So there's actually a little bit more room for big tech to get more expensive relative to the small tech, but we're certainly getting close to historical lows. So an interesting one to keep an eye on. And this is a bit hard to read, and I can't work out how to zoom back in now. Thank you, Ash, after zooming out. Let me try this. But just as a reminder, this chart on the right-hand side, bodies in motion tend to stay in motion. So this is looking at unemployment, consumer confidence, and small business confidence. And it continues just to trend up ever so slightly, meaning unemployment is trending up and consumer sentiment and small business is trending down. They've inverted those charts. Now, they've elected Trump, so maybe confidence is now going to go through the roof because they've found someone competent to lead them. But if history is anything to go by with these charts, once unemployment and consumer confidence start to trend, they keep trending until something like a recession happens. So it will be interesting to see what happens. I thought this was just interesting in terms of some of the numbers of what this company believes it takes to build your own model. So they're looking at building a simple model, average model, complex model that actually in this day and age is still costing somewhere between 20 and 60 million at the simple end and 40 to 180 at the more complex end, which is partly why when you hear these AI raises, raising 100 million, 200 million, 500 million, well, they need to in order to buy all of the stuff and get all the development talent. And what these guys liken AI to is it's the new electricity. But the ironic thing is that this new electricity needs the old electricity to scale. And it needs a lot of it, which is why Microsoft and others are really investigating nuclear. Just a reminder that there are no rich companies that are also low energy companies. So this is a chart for people at home that actually shows the electricity consumption per capita and their GDP. And it's this line from bottom left to top right. There are no low energy rich countries. Norway's all the way top right, highest GDP per power, which makes sense given how much that they produce. And then bottom left, you have Afghanistan, Haiti, Somalia, and then you've got everything in between. And this is one of the slightly scary things for me because some of the countries that we use for cheap back office labor resources are going to be the first places to get replaced by these AI bots. So whilst I don't want to be too tinfoil hat and you can't be too worried about what's going to happen in the future because then you get really fucking depressed, like it's just hard not to see that there isn't going to just be mass mass change, and the problem with governments, they have a tendency not to keep up. I think the easy solution is going to be just taxing each AI robot. Just have a small tax on it, which then allows you to create human universal basic income, which allows people to still have food, clothing, and shelter, but that then doesn't quite deal with some humans need a bigger vision and mission in life than universal basic income will be able to provide. But
Don,
right,
I've got
I thought this
give me a
was chart.
prediction. Don, give me a prediction. When do you think employment tax will be abolished, or if not reversed, and there's an incentive?
I think it's going to be sooner than we think, but later than we need to be. I mean, have a look at how fucking slow governments are. Like, and how, like, Queensland can't even get daylight savings.
Yeah, the cows. What about the cows, Don?
Yeah. Well, somebody think of the cows and the, like, so the problem is the people that get into power are like the very definition of half a chromosome away from a chimpanzee. And so so I think it'll be sooner, Jack, but not without, it'll rather than being proactive, it will be in reaction to like shit descending into madness, and therefore it won't be smooth and it won't be pretty.
Yeah, it's inevitable though, right? Like aging population, declining population growth. Meanwhile, rising levels of debt. Like taxation's going to have to go up. I reckon GST is going to go up. I reckon they're going to tax the crap out of property and increase it like they just did in Victoria, because it's the biggest like pool of wealth that's just sitting there.
More
Crypto, baby.
VC. Yay. Less property, more VC.
Yeah.
Yeah, we're investing in the front line of these. And I'm also downloading plans on how to build a cave. So, barbell.
Also, I have a graph that you should have included, but I forgot to send it to you.
What is it?
So it's a graph of Dogecoin's value. And so we're now at the stage of the bull cycle where Dogecoin is back being more valuable than Deutsche Bank.
Nice.
Bloody dope.
We're back, baby. We're back.
Now
speaking of Deutsche Bank and the old economy, this is the relative percentage of cash being used, debit cards, credit cards, and other. Like, there's almost no cash left, which, given some of the thing, pardon?
Who uses cash?
Well, for some of the things I get involved in cash, I do.
Yeah, I'm doing a reno, and then I'll be taking money out and giving cash.
Americans for tipping. Apparently, they all carry cash so they can tip.
Certain plants, cash, debit cards, credit cards, and then other.
Is that like gold, diamonds? Like, what are we talking?
Yeah, all of that. So this chart, so just for those at home, like in 2008, so not so long ago, cash was what, 70%? It's now 11%. So it's inevitable that it disappears. This chart is the total number of ATM cash withdrawals by debit cards monthly. And you can just see since 2008, it was like 70 million and it's dropped down to about 30 million. The number of bank-owned ATMs nationally was 13,000 of them back in 2017. It's now 5,000. I want to know, it's now the private ones that when I go and get cash for things where I then pay $3 a bloody transaction. This one was interesting. Personal credit cards on issue. Post-COVID, a lot of people got rid of their credit cards. I guess if you got a whole lot of money maybe in the stimulus, you could get off the credit wheel.
Well, not just post-COVID. Look at that drop in 25. Like, that just plummeted.
Well, it's not, you mean 24. We're still in 24.
The end of 25.
Oh, on the chart. I'm looking at the chart. Obviously, we're not in 25, but yeah.
Well, I just wanted to clarify that because the way you said it.
Yeah.
I forget people are just listening at home and not actually seeing the chart.
Yeah. So I thought that was interesting. And then mobile wallet transactions as a percentage, really interesting. It's up and to the right. It's nearly 40. And then this is the use of mobile devices for card payments in 2023 based on age group. So 18 to 29, so that's half this podcast, 62%. 30 to 39, 43%. 40 to 49, that's the other half of this podcast, 36%. 50 to 64, that's the way one of the people on this podcast looks, 28%. And then 65 and above.
My takeaway, we're in the top 36% of our age group, Don. At least for something.
I don't even know where my cards are.
I was going to say, do you guys actually carry your physical cards? I find it so painful. I don't carry them. And then there'll be some random parking ticket machine that needs a physical card.
The only time I carry them is if I'm leaving the house at 8 and I'm going out that night and I worry my phone may not last in battery.
Yeah, fair enough.
Got
And
a
then the
plan.
final one, $1,500 client. Before I pay, can I send you something? Can you send me something in writing? I need to have a second call so I can have time to think of questions. If I don't get results, can I get a refund? Can you add a guarantee that I pay half now and half once I get the results versus a $25,000 client? Let's fucking go.
Oh, this is so true.
That is so true, and why we always push pricing strategy with our founders, because price is such an effective filter.
And full transparency for founders listening, this is so true of our LP base, like investors. The ones that write the biggest checks, they're the fastest. The fewest questions, they get it done. The smaller check writers spend the most amount of time, the most amount of questions, the most amount of interactions, the most amount of hand-holding. For founders, this is such a good lesson.
I would like to do a shout out though. We love you very much and we'll continue to hold your hand and appreciate your investment.
Absolutely.
In the future, however, it'll be a bot. Jack, with your renovation, are you the top or the bottom? It's like,
Yeah, definitely the top.
I'm the top. I'm like, I've got these old nails that I got from the farm when I took down the barn. Could we straighten them and use them, please? The chippy turned up the other day, and before he doesn't even say hello. He says, "What have you changed now?" I'm like, rude.
He just knows you.
What had you, Jay?
Well, the problem is until it's physically built, you just don't get a size of proportions in some of the things. So a couple of times I'm like, why the fuck is the door there? That doesn't make any sense. That needs to go over there. And that really needs a window. And that gable is sticking out too far. So yeah, a few little changes. And then a couple of them, I was a bit worried that they weren't going to follow instructions. So they got up and did it myself, but then made a mistake. And that's led to some more materials having to be purchased. But anyway, good friends with the chippy. Silence.
We have nothing.
That's all the Sharts. That's the end.
Well done. They were good.
All right. Well, what are you looking forward to? I'm looking forward to doing all my Adelaide, all my admin while you guys are away having fun and getting everything up to date so I can just say fuck you at the next episode.
I'm looking forward to Adelaide. I'm looking forward to catching up with Jack and Ash and all the yokels. It'll be fun.
Yep, 100%. Taking Aaron to the one watering hole in Adelaide. If you're not there, don't even bother. And Stone Hearts and Mine on Friday. Really good event. Excited that Adelaide is getting to host it. Bunch of people from the investment community in town. So great time for Aaron to have a trip, mingle, meet some people, drink some nice wine. That's about it.
That sounds just like an advertisement for Adelaide. What about you, Jack?
I'm looking forward to catching up tomorrow. And then we get the keys to the place on Friday afternoon. So
Woohoo! Yeah. How good is that?
yeah. So no, exciting times.
You don't look that excited.
Oh, there's a lot of shit to go between now and then, but yeah, I'm excited for it to all be done.
Oh, so good, buddy.
When's the housewarming?
Post the reno, so don't know yet.
We'll be there. Fireside chat.
Ooh, love it.
Down the road.
Yes.
All right. Well, I got to get to a board meeting.
Fun.
So,
Wait, Don, what board meeting you at? Is that the one that you're excited for?
yeah. Like, I'll edit this bit out.
Is
Now
that
I'm
because
actually
you
really
think it's
excited
going
for
to
it.
be super efficient now for these government people to book bookings?
Yep, and corporates and the tools that are coming out now are really going to help them, and they're a really great team that I think just they've been doing the hard yards for like 8 years. They've got the infrastructure, they've got the foundations that now these tools they're going to be able to leverage. So in hindsight, they've gone through a whole lot of pain that now they've got a ticket to the ball game, and they have a real opportunity to win. And I'm
Sweet.
excited to try and help them.
That's good. That's awesome.
All right, I gotta run because I gotta use the bushes outside before the next meeting.
Enjoy.
Okay.